Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Today is Wednesday. It's the 2nd of March, 2022. And I'm going to just bring up our high-risk investment warning. I'll keep this on screen for a few moments. Hey, Zanetta, nice to have you on the webinar. Welcome. Hey, Howard, morning to you. And thank you, everyone, for joining. We'll go till the top of the hour. And then I'm going to switch to the crypto minute. I just want to keep those separate so that I can put them on the website separately. So that's the sort of the timeline. Let me bring up our market commentaries disclaimer here. And here's our references. So I'm not sure we'll use TradingView, but I just want to keep that up there just in case we do. CNBC, we're going to go through the morning note in a moment, and then we'll go to the charts, and we'll do some analysis. We'll actually start off today, I think, with gold. Certainly looks to be an interesting chart. But before we get into that, let's go to the media headlines. The headline reads: European markets head for mixed open as Ukraine-Russia conflict continues. The article reads as follows: European stocks are expected to open in mixed territory as the geopolitical crisis between Russia and Ukraine continues. The mixed open expected in Europe comes after similar trade in Asia-Pacific markets overnight, with shares in the region dented by concerns over the ongoing Russia-Ukraine conflict. The war between the neighboring countries in Europe is leading to a surge in oil prices, so we'll have to take a look at the oil chart as well. With international benchmark Brent crude futures up 4.43% to 109.62. US crude futures also saw big gains, rising 4.48% to 108.04. That's big double there in terms of stagflation. We've mentioned that before, so we'll try and get this all in within sort of the next few moments. Otherwise, we'll I'll ask you whether you'd like to continue or move on to the crypto webinar. Brent briefly climbed as high as 111.09 per barrel, its highest in more than 7 years. That's despite the International Energy Agency saying Tuesday it will release 60 million barrels of oil from global reserves in a bid to ease the current supply constraint. You know, these oil reserves, they really a drop in the ocean. I think the big deal is today we're going to have an OPEC Plus meeting. It's going to be very interesting to see what comes out of that meeting. The basic thinking is that OPEC is just going to keep things as is for the time being. Their timeline is to increase production by 400,000 barrels per day per month. Every month, when they have, I think they increase by 400,000 barrels per day. But that in of itself is slightly misleading, because capacity in a lot of the OPEC countries is under huge pressure, so they can't even reach that. So we're still in a very tight market here. European stocks closed firmly lower on Tuesday as a significant Russian military convoy headed towards Ukraine's capital, Kiev. A Russian airstrike hit Kiev's main television tower on Monday afternoon, killing 5 people. Meanwhile, Russian forces continue to attack Kharkiv, Ukraine's second largest city. Earnings in Europe come from Atos and Signify, with data releases including the Eurozone's inflation rate in February and Germany's latest unemployment figures for February. Right, so just taking a look at gold as a safe haven, we're looking at a weekly chart here. We've got the 3 moving average as an overlay. We've got the fast green showing quite a bit of angle there, so there's certainly momentum. But then all 3 of them are starting to show angle acceleration. The stochastic is heading towards this 80 level. To me, this is concerning because because I did I wanted to do a comparison with gold versus the US dollar. I'm just bringing that up here, and I think they both interesting charts to keep an eye on. Let's just bring this here, and for me the interest is in the stochastic. Gold stochastics turned down on a weekly basis. Gold stochastic has turned up on a weekly basis. To me, that's not a particularly good sign given the geopolitical situation. The way that I'm interpreting that is that stagflation is a real risk at this moment. So if there is stagflation risks, there's very little that central banks can do. In fact, expansionary monetary policy, contractionary monetary policy at a time when there's stagflation exacerbates the economic situation. And I think, the central banks have to be extremely nervous about that. And so we had talks of 8 rate hikes, 7 rate hikes, 6 rate hikes. I mean, however many, there was a fair few rate hikes that were being discussed. Slowly, these are being sort of siphoned out of the market, and I think that if that is the case, well, the dollar strength that was being anticipated at the beginning of the year, well, that now becomes that is now facing pressure, and given that we're moving into this environment where stagflation becomes a real risk, well, gold all of a sudden becomes the safe haven of choice. Okay, and it looks to me as if that's what's taking place here. We're just going to monitor this, and this we can't get away from. Let's bring up the Brent CFD here. Take a look at this. This is Brent. So we're trading at 112. Take a look at the stochastic. Now, this is serious, considering our inflationary environment. We've got this stochastic sitting in the 80 area. The longer it stays in this 80 area, I think the more attractive, believe it or not, gold. Never mind that oil will be appreciating. I think the more attractive gold becomes, because all of a sudden, as Peter has written here, central banks are getting boxed in. And let's just take a look at the RSI here for UK oil. Let's bring that in. And there was the State of the Union overnight, where President Biden said fighting inflation is his #1 priority. But it's not the central banks that are getting boxed in; it's policymakers in general. It does look to me as if this may be overdone. It may be overdone. So let me paint a potential scenario. This is just I'm just surmising this. However it plays out, we're all going to be watching this together. But let me just bring up Microsoft Paint here. And you guys know, we've discussed this many times, that there is what's called the 3-stage. There's the 3-stage model in Dow theory. This is what may be playing out here in the oil market. This is sort of best case scenario in terms of stagflation, in that after the global, I beg your pardon, after I'm tripping over my words, after the pandemic first hit us, there was this massive fall in the oil price. Slowly it recovered, and the real sort of early movers, that's when they started building this renewed confidence phase. We've got to a stage, then we move into the next stage. The theory put together, the theory put together by Dow was really about stock markets. They called the second stage improved earnings. But I think in terms of just general energy market, I think that we would align that with better earnings for the oil companies, the demand for energy picking up, etc. But I think now with this geopolitical crisis, there is a potential we've moved into this the last stage, which is rampant speculation. In other words, the pros understood that there's going to be a tight energy market. They were in way before Brent hitting 112, right? So what may be happening here is that they selling some of their positions to the latecomers. Okay, eventually, and again, I want to reiterate, this is speculation, but it's just if you take a look at how the markets tend to evolve over time, they do follow these three stages generally. The next stage, okay, so if we kind of want to rush into buy oil, the next stage, and previously I called it the loss of confidence. That wasn't the correct name. It's actually called abandonment of hope. Okay, so we're certainly not into the abandonment of hope stage, because we've seen there is tons of money going into the oil markets now. But I'm of the opinion that it's an extremely dangerous time to be getting involved in the oil market. Now, we could be sort of at the beginning of the rampant speculation. In other words, we may see prices go to 120, 130, but I think we are in the speculative stage, which is simply defined as follows. It's the time in the market when you'll make the most money. It's also the time in the market that's got the highest risk. Okay, high risk, high reward. The problem is everyone's concentrating on the reward. Nobody's concentrating on the risk. And that's really where the focus should be. Just incidentally, you know, I was having a conversation with my father earlier today. We sold out of our Sasol positions last week, and he's asking, shouldn't we go back in? Shouldn't we go back in? Shouldn't we go back in? And I'm saying, but I think we may be in this like speculative stage. So you can see that my observation is that there is a certain sort of fever building here, and so I want to just keep an eye on this. Okay, it's now top of the hour. I'm thinking we should be moving towards the crypto minute. Please join me for that. We'll take a look at some of the cryptocurrencies there. Thanks very much, guys. Pretty much, Anna. Pretty much. All right. I'll see you on the other side.